Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up for this Tuesday, the 13th of July, 2021, 5:45 p.m., and that is Central Time. So I'm looking at everything. Today was Inflation Day, CPI, but before I get there and give you my take on that, tomorrow at 12:15 is our live What's Up webinar. If you want to attend during the course of this video, you're going to see right up here an icon. Click on it, fill it out, and that way you can get in. Now, when you get yourself registered, you're going to get an email back from us with your password. You have to have that and so on. Read the email. It's got my email address in there, and just click on it. Send me any questions you might have, that I'll try to get to them and set up the charts before the meeting begins. If I get all of you coming in at one time and writing your questions there, I'll do what I can, but I have a time limit on this. It's between 15 and 20 minutes. If I can't get to your question, too bad. All right, and remember, I don't record these, and there will not be one next week. All right, I won't be in Chicago next week at that time. So let's talk about what is going on in the market. So as I said, inflation running hot, the hottest number since 2008. Fed Chair Powell tomorrow speaks in front of the Senate committee. Then he goes to the House the day after. I think this is called the Humphrey Hawkins. You know he's going to be questioned about inflation because here it is, the hottest number in 13 years. And if I'm a senator, how could you not ask about it? Although they were pretty bad in their questions on the last drilling of him. So we'll see what goes on there. And what I expect him to do is use the word transitory again. But let's go to the charts, because tomorrow I can talk to you about that if you ask questions about it. So in the chart action, and let's see if I can get this to flip-flop on me. There we go. If it will do it. There we are. On the weekly chart, you're still over the 18-week average of closes. 1801.70 is that number, so the bias is up. You never did close under 1767.70, so that's good news on the chart. The market's now digesting all that's gone on, and you can see that here, and the pattern is not pretty. You actually could say you got a lower low and a higher high, or what do you have? Well, always do this. Go with me like this. The low here would be 1794.10. The pullback here so far, 1796.60, then 1791, and then back up today. So what do you have? You have a lower low and a higher high. That is certainly not bullish. What else do you have? You have a market that's trying to fight and hold the 100-day average of closes. It's not trending, so taking out that 1791 doesn't impact the market one way or the other. But here's what does impact the market. All you did is you rallied up to the upper Bollinger Band. If you've taken my enhanced Bollinger Band course, you know that what I teach is the first hit of that when you don't have what's called an embedded reading. I think the pros came out. So this rally that began here finally culminated first in fighting a battle at the combination of the 18-day average to 100. It tried to stick its neck higher, and it got slapped in the face saying, oh, no, you're not just yet. It could change later, but not just yet. The differential between August gold and July silver, still favoring gold. It's staying up over that number. In silver, you tell me. Look at how this market rallied up. You got as high as 26.44, 26.48 is the upper Bollinger Band, and wham, you're right back down to 26.07. So you may not agree with my methods of charting. I like them. Higher and lows. Now you got the shot at lower highs. You're stepping out of everything, but you're in support. In the copper market, the battleground's the 18 to the 100-day average. The 18-day average of closes to that number. The pattern is still one with higher lows. However, you have lower highs. That is not a trend. So you're just marching back and forth here, trying to figure out what the next setup is, and I don't think there is one just yet. In the platinum, let's see how close you could get to a Bollinger Band. You tell me. Today's high, 1122. Where did you culminate against? 1122.60. Time for the pros to walk away in an overbought market. Wouldn't surprise me if you fall back towards that 18-day average of closes. And you're so overbought. Why do you want to buy an overbought situation? In the palladium market, this is different, and I like this. I don't like the risk you take in Palladium. It's total insanity via the size of the contract. But both numbers are over 80 on Friday, over 80 yesterday. So you have your embedded reading. On pullbacks, until this red number closes under 79, I think you'll get buyers in the market still eyeing the 29.45 zone. In the dollar index, if you lived in the IRA world, where do you think that the dollar is going to encounter resistance? In unison, like a choir, 92.85.5, the Bollinger Band. You're not embedded. If you didn't take the course, you don't know the rules, and I'm not going to teach them here. That's where I think the pros will step out of the market. I realize you're going into a big meeting tomorrow between Fed Chair Powell and the Senate, but that's what I still think. Ethereum, still leaking away. We talked about the resistance that showed up at the 200-day average, and it's driving the market down. We're not in a trend. We're in a leaking market. This is a vertical price decline. I mean, come on. How do you go short there? Tell me the reason you're going short there. I can see getting out of longs, but what's the reason to go short? And it's leaked away from 24.20 down to today's 1918.75. So when I put it all together, that's what I think. Remember, tomorrow, join me in the live webinar. It's fast-paced, it's fun, it's 15 to 20 minutes out of your time. I open at 12:15 for you to get all set. I start promptly at 12:30, and I end this thing in 15 to 20 minutes. Hope to see you tomorrow.